The U.S. has a very terrible fiscal situation, and this need to refinance an enormous amount of debt comes at a time when foreign buyers of treasuries are beginning to decide they would rather do other things with their current account surpluses. And so to the extent that the Fed is saying that it won't monetize the debt and will continue to raise interest rates, then the market is sort of telling the Fed that you can't do that.
This is Kaiser Johnson with Liberty and Finance, and this is the Miles Franklin Weekly Special for October 9th through October 16th, 2023, while supplies last. This week we feature two different specials: Silver Morgan Rounds at $2.09 over spot from CNT, and half-ounce Gold Eagles at $1.15 over melt. First, the Morgan Round from CNT celebrates the classic Morgan dollar, but is 4 nines fine and 1 full troy ounce of silver. It's also IRA eligible, and at just $2.09 over spot, a great way to stack 4 nines fine 1 ounce silver at a low premium. Next, the Gold Eagle is one of the most popular gold bullion coins in the world, providing incredible recognizability and investor trust. The half-ounce Eagle adds a further degree of flexibility and liquidity. They come 42 a tube and are available at just $1.15 over melt while supplies last. They're also IRA eligible. And if you'd like to learn more about a precious metals IRA, call us and we'll be happy to help you in that process. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Doomberg from the very popular Doomberg Substack channel. I believe the #1 financial contributor to Substack. Thank you so much for joining us today, Doomberg.
Elijah, it's always my pleasure, and looking forward to another great discussion with you today.
Well, it's great to have you. We've obviously had some tragic news over the weekend here. The Israel-Hamas conflict is really getting worse by the day, it seems like. You just put a piece out talking about how this is really bad timing, that this is happening right when kind of U.S. politics are in turmoil as well. But I wanted to get your perspective on the conflict, how it's going to impact energy prices, the financial markets. But if you want to start with that kind of political element here in the U.S.
Sure. Before diving into the piece, I think it's important to say up front how horrific these events truly are to observe, and how awful I think the attack by Hamas against unarmed and otherwise innocent civilians should be universally condemned. And we do hope that the situation does not escalate any further than it already has. But it really is, frankly, depressing to see what humans are capable of doing to other humans. And it really is, I think, a sad, terrible situation. And again, one hopes that it doesn't get any worse than it already is, and that a resolution can be found in a way that does the least amount of damage to non-combatants in particular. And so anyway, with that out of the way, yes, we did write a piece this morning called Minority Report, where we talked about how this is, in fact, pretty poorly timed. And our purpose in writing this piece was to ponder what the war in the Middle East means for the war in Ukraine. The U.S. might be the world's greatest superpower, but we have limited resources like everybody else. Sometimes we act as though and formulate foreign policy as though we have unlimited resources, but of course we do not. And it must be said that the war in Ukraine has probably not been going as well as many in the West had been led to believe. And there's a growing backlash against the continued support of Ukraine amongst what the media would call the fiscal conservatives or the hard right. And in fact, the toppling of Kevin McCarthy from the position of Speaker of the House was driven by a potential side deal that the people who voted against him accused him of making with President Biden to help facilitate the passing of more funds through Congress for Ukraine. And so objectively, I think it's impossible to analyze what's going to happen in Ukraine without first realizing that what's happening in Israel is going to impact U.S. politics. And you can't measure the impact of U.S. politics without analyzing a bit, and that's what we try to do in the piece. And And even overnight, we see that, Scalise backed out, and it doesn't look like Republicans are any closer to getting a speaker. And funding for Ukraine is running low. The support for Israel is far more bipartisan in the U.S., and this situation is probably viewed by many politicians in the U.S. as more urgent and closer to home, and worthy of substantially more attention and resources. And we believe that necessarily probably crowds out Ukraine to the benefit, unfortunately, of Putin. And we know historically that when Putin feels like he has leverage, he tends to be a little more emboldened than perhaps the amount of leverage he has would justify. And so we think we're in a particularly dangerous period for the Ukraine situation. And we close the piece by highlighting this, I think, ominous development of what appears to be the destruction of a natural gas pipeline that connects Finland to Estonia. And if we are in a new phase of geopolitical warfare where the wanton destruction of critical energy choke points is considered a commonplace, then nobody is ready for what's coming. And so, it's difficult to write about politics without triggering some people, but we felt it was timely for us to sort of lay out what we believe actually happened with McCarthy and what it means for both Israel and for the war in Ukraine.
It is interesting, the connection there and how both wars may impact each other. I did want to ask you how this is going to be impacting the energy markets in Europe and also in the US. People have been saying that this could significantly increase oil prices. Your take on how this might affect energy?
Well, it all depends on two things: whether Putin makes a stronger move in Ukraine, but more importantly and more urgently, whether the war expands to Iran. Basically, is when you're watching the price of oil this week, what you're really seeing is a reflection of the nature of the headlines that are crossing the Bloomberg terminal about the odds of the war spreading beyond Israel, Gaza, to Hezbollah in the north or Iran. And sort of spreading to Hezbollah would be a proxy for Iran in the eyes of speculators in the energy markets. And I think, you have people like Senator Lindsey Graham openly calling for the preemptive destruction of Iranian refineries. I don't think that's very helpful talk. I think such dangerous talk can lead to self-fulfilling prophecies that nobody would like the outcome of. The number one export partner for Iran is China. And if we start bombing Iranian oil facilities, does that trigger China to make a move on Taiwan because they have their own strategic oil reserves to worry about? And if their supply is cut off by the U.S., maybe much like the way Japan attacked Pearl Harbor, China might feel like the clock has officially started ticking. We want to probably think through the second and third and fourth order ramifications for such wild statements before we articulate them in public in the way that Lindsey Graham did. And so I do think this is just a very, very dangerous time, Elijah. And if the war does spread to Iran, I think all bets are off where oil can go. And as a consequence, I don't think the G7 economies can withstand a super spike in the price of oil that a war with Iran would entail. Secondarily, it's an awfully bad coincidence for Europe that this conflict has broken out in Israel just as Europe is heading to the winter. And, again, this destruction of this pipeline in Finland could be viewed by NATO if they pin the blame on Putin as an attack on NATO, which then escalates the war over there. It's starting to feel like World War III. And nobody should be happy with that development, in our view.
How can people prepare for this? Because if we do see a spike in oil, as we did, I guess it was February of 2022, February-March timeframe, that was really difficult for people. Inflation was incredibly high. Back then, we still have pretty high inflation right now. But how do you see this impacting the average person in the US and also across Europe? And how can people prepare for that now?
Again, let's hope that these scenarios don't come to pass. And the market is not pricing them today. I mean, oil's up today as we're talking, but the market is not pricing the worst case scenarios that we're talking about, i.e. a military hot kinetic conflict between Israel, a proxy for the U.S., and Iran. And I don't know that you can prepare for that outcome. I mean, I think it would be unthinkably catastrophic. if we wake up to headlines that advanced jets are dropping bombs on Iranian oil infrastructure, I don't know where the price of oil goes, and I think it goes a lot higher than we saw in January of 2022. And so far this week, things have not escalated beyond the sort of the immediate area to any meaningful extent. If that changes, and then how people prepare for it. We've talked before about preparedness starts at home and so on, and so that you just have to sort of rely on your strategy and implement the tactics that you've developed as a family for your own personal and financial security and be properly hedged and so on. But there are certain circumstances nobody can prepare for. And this is a very dangerous situation. And I think it would behoove some of our leaders to treat it as such and to be a little less flippant in the language they use in public.
Now, you mentioned energy during the winter season. We have a viewer's question on this topic. Ben asks, given the lack of refinery capacity and tight supply, what's the outlook for heating oil availability and prices in the Northeast this winter season?
Yes, great question. We wrote about that a little earlier, a couple of weeks ago, I suppose. The price of diesel, which is of course very closely related to heating oil, practically molecularly indistinguishable with a few differences in additives and a dye or two. That's one of the most important charts in the world. I think it is a proxy for inflation. We had a great chart in that piece where we talked about the correlation between the price of diesel and inflation. And we see that correlation to be very, very strong in the U.S. And so long as, again, we don't see a global conflict, i.e., in particular, a hot conflict between Israel/US and Iran or China-Taiwan, I think we'll be fine. I think the market is sort of signaling that things are tight, but shortages aren't necessarily on the way. Again, all bets. It's very difficult to be a macro analyst when you have one or potentially two giant events that, if they happen, change everything. And so that would be the way that we would frame that.
And with respect to natural gas, this viewer is wanting to know, where do you think natural gas is going by the end of the year? You mentioned how it's very difficult to forecast any of those things because, we kind of have these wild cards out there.
Yeah, I would say much depends on the weather and much depends on the wars. And it's sad that we have to say wars plural now, but that's the new reality after last week. And if you look at the natural gas chart in Europe, which of course we should say natural gas is very regionalized, and we've talked about this before, it's starting to perk up a little bit, actually. So, from the lows of this summer, and I'm just pulling up the latest data now as we speak, from the lows of this summer, the contract is up almost 60%, and it's trading hands today at the Dutch TTF contract at $16 per million BTU. And just as a benchmark, it's trading for $3.20 per million BTU in the US. Now, during last year's energy crisis, that same contract, the Dutch TTF contract, changed hands intraday for as high as $100 a million BTU. So we're nowhere near the crisis levels of last year. And I would say, again, the market is pricing in a risk premium, but it's not pricing in a probability of this thing getting worse. Although I think the situation of Finland is worth watching carefully. It's very underreported in the Western press. I bet it's probably the first time you heard of it when you read our piece this morning, I'm guessing. That this is a very dangerous situation. It's echoes of the Nord Stream pipeline explosion last year. And if this is viewed by NATO as Putin extracting revenge for Nord Stream, the tit-for-tat retaliatory prospects could cause that contract to go from 16 to 50 in the blink of an eye, which is what we saw last year.
Now, when it comes to the financial markets, we have a few viewers' questions on that topic. And obviously, when it comes to the wild cards, these are unpredictable as well. But we have seen a downturn recently in the stock market. If you look at the last 6 to 8 weeks, do you think the stock market is sensing something, on the horizon, or why do you think we've seen this downturn, and do you see it continuing?
I think the chart to watch is the 10-year, the U.S. 10-year. And I think the market is currently taking its cues from the U.S. 10-year. And what you saw when markets were struggling, we saw this blow off top to over 4.8% yield. This morning, the 10-year is down to 462. And what is the market doing? It's rallying. So really, I still think it comes down to the market trying to front run what it anticipates the Fed will do vis-a-vis interest rate policy and quantitative tightening / quantitative easing. And then at a deeper level, it's anticipating the rate of change of what the Fed will do versus market expectations. And I think that can be difficult for the average person to cut through, which is why one of the reasons why we don't trade stocks ourselves. But if you're looking for the two charts that we watch every morning when we wake up, the first one is the price of diesel, because I think that's a proxy for the energy crisis and where we reside. And the price of diesel around the world, of course. I mean, there's not just one diesel contract. And the 10-year. Those are the two. The long bond, 10-year Treasury, 30-year Treasury. What's the long end of the curve doing? And it's very, very, the correlation between the movement in yields and the movement in stocks has been pretty tight recently. And I think until that correlation breaks, that's the chart you need to look at every day.
And what is causing such a crisis in the 10-year right now?
The inflation data coming in hotter and so on. Again, the Treasury market, the U.S. has a very terrible fiscal situation. And this need to refinance an enormous amount of debt comes at a time when foreign buyers of treasuries are beginning to decide they would rather do other things with their current account surpluses. And so to the extent that the Fed is saying that it won't monetize the debt and will continue to raise interest rates, then the market is sort of telling the Fed that you can't do that. And so I think any major pullbacks in rates is an indication that the market believes the Fed will give in and monetize the tsunami of debt coming due that needs to be rolled and refinanced. And on top of that, we are generating huge deficits, and the prospects for any fiscal discipline coming out of DC have only gotten worse with the whole McCarthy affair, we believe, because the impasse is going to be substantial. I think the odds of a government shutdown, for example, are very, very high. And so I think the market is still being controlled by people's expectations of what the Fed will and won't do. And so actually, it's kind of interesting that in many ways, the underlying performance of various companies in these indices doesn't really matter. There's a lot of passive investment vehicles, and it's also driven by the 10-year, in our view.
You mentioned how the U.S. is in a very difficult situation right now. We have a question from James. Is it possible for the U.S. to heal? What can be done for the U.S. to have a balanced trade and a balanced budget? I know you mentioned the budget in particular there.
It's a great question, and I really like the word heal. I would say that the country is so polarized that it can be depressing. Yeah. I had a friend who DM'd me who went through the fall of communism, and near the end of the communist era, he was living in East Germany, and he said, you just got used to retreating to the sanctity of your own private garden and shutting yourself off from the discourse and the decay that you see around you. We put out this piece this morning, and we tried very, very hard to be as analytical and apolitical as possible. I just don't think that sometimes in life it requires that you analyze politics to understand where markets are going. And we tried to analyze politics to the most logical way possible. And both sides, of course, were annoyed with our piece because to some readers, distance from me is automatically interpreted as member of the other team. And so we've been called MAGA and anti-MAGA in the comments to this piece, which I suppose means we're probably splitting it down the middle correctly. But it is amazing how difficult it is to have meaningful discussions about complex topics in modern society. And the word heal in that question is really important. And I think the path to healing has to involve civilized discourse where views that you may disagree with can be expressed to you in a polite manner, and you could politely, engage in honest debate about differences, so that you may either change each other's minds. And that's so rare in our society today that it's a bit disheartening, actually, if I were to be perfectly honest about it. But we intend to keep doing it, one conversation at a time, one podcast appearance at a time, one piece at a time, one reply to a comment at a time, and one post on Notes, Substack's version of Twitter at a time. Because that's the only way. I mean, the only way out is true. I don't think imposing your views on other people is the way to a meaningful and durable healing. And so I do appreciate the question. And I do think that civilized discourse is the way out. And so that's why I love coming on your show, by the way. Like, I'm sure you and I don't agree on everything, but we express our views politely and always happy to chat. I think if we had more of that in our society, I can't imagine we'd be in a worse position than we find ourselves now.
And one topic that I guess is becoming a little less controversial, but some people see as kind of a positive move forward, is that uranium is becoming more popular. Uranium energy seen as kind of another clean energy out there. Your perspective on that and the recent run up in uranium. We have a question from a viewer here. Are you currently positioned in the uranium sector? What is your near and long-term outlook for uranium investments?
So we are not. We hold no position in the uranium sector today. We used to be long the Sprott Physical Uranium Trust, and then when we started to write more about it, we have a general rule that we don't like to write about things where we have a financial interest, and so we divested our holdings in that space. That we would be bullish uranium secularly. The particular entry and exit points are not something that we could advise on, but I think there's no question that there is a nuclear renaissance in most of the world that is very positive. And that can only put a tailwind behind uranium. Now, you're always one catastrophic accident away from the media, piling on, and a retreat from this momentum may still occur. There's risks to the trade. There's no free lunch in life, and there's no free money for sure. But if you pushed us and we said we had to make a bet, we would go long. That's not investment advice, and everybody has to ponder their own portfolios. But no, we do not have a current position. We would be secularly bullish. I haven't looked at the price in a few days, so I don't know where it's trading today. I thought it was around $70 a pound in that range. And so that's far below the all-time highs, and there's more room to run. And as we like to say, the price of uranium could triple and nobody would care, because the price of uranium is such a small input into the operating of a nuclear power facility. And so, unlike oil, if the price of oil tripled, it would be a catastrophe for the world. There's a lot more flexibility, I suppose, both directions, as uranium has shown over the years. And so for a trader, it's probably a pretty fun market to play.
Probably have time for one last viewer's question here. It gets back to what we were talking about at the beginning about inflation and higher energy prices due to the wars going on and the potential for that. Chris wants to know, what do you think will win out, inflation or deflation? The question is, with regards to assets, specifically commodities and their respective derivatives, will deflationary pressures of the recession, rising dollar and 10-year yield and QT, quantitative tightening, push prices lower, or will supply shortages and the highly anticipated new round of QE push prices higher?
We would be in the camp that says risks of inflation are to the upside versus what is currently anticipated. I just think you have to look no further than the U.S. fiscal situation. There's, I think, $7 trillion in debt that needs to be refinanced in the next 12 months. The term structure of U.S. debt is very front-loaded, and we're piling on new issuances into a market where there are fewer buyers, which is why we're seeing elevated interest rates. So we would be in the camp that if debt can't ever be paid back, which I don't think anybody's projecting that we would run $33 trillion worth of surpluses anytime soon. Your two choices are really to default or inflate it away. And historically, very few governments can resist the temptation to inflate it away. And so we would be, over the long term, anticipating substantially more inflation than perhaps we have experienced in the past 20 years. But we shall see. That's our view today.
And if our viewers are interested in learning more about your work, they can go to your Substack channel, and we'll put that in the link in the description. We'll put a link to that in the description of this video. Any last thoughts before we let you go, Doomberg? And can you share with us a little bit about what you do?
Yeah, sure. Doomberg.substack.com. We write about energy, finance, and the economy at large. We're 100% subscriber supported. Really appreciate all of our subscribers, even the ones who disagree with us on certain pieces. But it was always fun to be back, and I love your viewer questions. You have a very smart audience, and so looking forward to the next time, Elijah, and have a really great weekend.
You too, Doomberg. Thank you so much for your time, and God bless.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we can let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Kaiser, my brother Elijah, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.